Hello and welcome back to the Dividend Hub and the 2022 June portfolio update. So the dividends for this month came in at a total of $4.83, which is pretty nice. We're definitely getting some things rolling here. I feel good about this. We got $0.98, sorry, from O, $1.15 from Pepsi, $0.4 from Aflac, $1.2 from T-Roll, and $1.1 from Raytheon. Not a huge dividend month. I think January is gonna be our biggest dividend month coming up. But it feels good to have some consistency because not a single month is like dropping hugely. I feel like we have very even spread as it is right now. So in general for this month, I went a little bit above budget, actually, about 10% over budget, which is fine. So this month, I decided that it was a good enough time to get into lows. One of the, or two of the really good things about this stock in my book was the dividend growth rate over 10 years is really amazing. It's over 19%. They've been paying and growing dividends for almost 60 years now, which is, it's definitely the kind of company that I'm looking for, considering that I want to keep this portfolio for a long time. They've been growing pretty consistently through the last 10 years, which is really good. And they've also recently shifted towards improving margin performance. Obviously, there are quite a lot of things to dislike right now. They have a lot of debt, and that's not great when we're going into the type of climate that we're entering now with higher interest rates and so on. The revenue was dropping slightly in the first quarter, but again, just not focusing on the short term. I think I'll like this over the next 10 years that I'm planning to hold this stock in. So that feels pretty good. So we bought in at $183, and that has since dropped a little bit, actually. But it's a nice 2.4% dividend yield, and again, their growth rate over 3, 5, and 10 years is between 18 and 19%, basically. And the last time they had a dividend increase, it was 31.25%, which is absolutely massive. So I feel pretty confident and good about this. The next one that we bought is a little bit of a more, let's just call it more of a gamble than Lowe's. So Intel dropped down in value quite heavily during 2022. But they have two really good things about them that I really like. For one, they're active globally, which means that me as a European, I'm not just locking myself into being dependent on the American market, even though European dividend stocks are not as common as American ones. So that I feel like is a huge upside for me. Now they've only been growing their dividend for, I think it's 8 or 10 years. So this is more of a short-term stock than Lowe's, for example. But their payout ratio is really low, which I like. That means, obviously, that they have a lot of room both to keep their current dividend, but also to keep growing their dividend. And now that I feel like they returned to some form of fair value. I thought, well, they're kind of cheap right now, so just jumping in a little bit is not the worst. If tomorrow the stock is worthless, it's like $35 that I'll lose, which is a fairly small percentage of the portfolio at this point. So it's not the end of the world, right? So the dislikes or the negatives of the stock, obviously, again, we're entering a really uncertain financial climate, and Intel and other semiconductor manufacturers have a lot of supply issues. So it's really difficult to see how that's going to be in the short term. I think there might be more that they might go down further soon, at which point I might buy another one, maybe. We'll see about that. Another thing is, if you've been following what's happening in the hardware market, recent years, AMD is definitely taking market shares, especially in the data center segment, I feel like, but also in the consumer market. I think short-term growth will be impacted by this, but I also think that Intel has become lazy over time, and well, maybe this is a good thing long term for the company. So I bought in at $38.65, and yeah, we can see it has dropped a little bit since then as well. It has a little bit of a higher yield, so it's 3.92%, and the growth rate is a little bit lower. But again, very small amount of the percentage of the portfolio, so I'm not too fussed about that. If we go into the overall view, we've now accumulated all of $25 of dividends over, well, in October, technically, we started the portfolio a year ago. So it's been 9 months right now since we started the portfolio, which is pretty cool. We've lost about 5.52% of the value since then, which is not as cool, but it is what it is. The market has been dropping really hard, so I feel like me losing 5% is not that bad of a deal, considering here in Sweden, for example, that the market has dropped maybe 25% or so, and I'm sure it's the same for most other markets. So it is what it is. The growth numbers, I've been fiddling around with them recently, so the short-term growth has gone up a lot, and the long-term growth has gone down a little bit. I'm finding it increasingly difficult to find reliable long-term dividend growth numbers. And I'm not sure where I should be looking for them. I'll have to research that a little bit. But again, Intel now is 1.9% of the portfolio value. So it's not that bad. But here's the overall view. And we are being carried pretty hard by AbbVie, who went up 22% almost. This 8% of the portfolio. MO recently went down as well. And then we have some other stocks that went down 20%, such as T Rowe and Oracle. I really believe in T Rowe as well. I might look into increasing that over the next couple of months, maybe. Because their dividend yield is up over 4% now. And their growth numbers are really solid for both short and long term. So I might look into that. But yeah, this was the June update. Thanks for watching, and have a really nice day.